Welcome back, everybody. Welcome back. It's about that time of day again, 7:35 Eastern Time. You know how it goes. Monday through Friday, 7:30 a.m. We go from the screen to the floor with our very unique morning prep for crude oil futures this morning. My name is Joseph James. I'm from School of Trade. I'm here with Marty Errico from Traders Audio, and together we're going from Los Angeles all the way to New York City, going from the screen to the floor. I'm going to begin this morning with a technical analysis approach, looking at charts, starting with a top-down approach, and I'll be moving all the way down to a very fast minute chart this morning so we can anticipate the direction at the open and then look for those high percentage trading opportunities coming starting at 8 a.m. Eastern Time. So make sure you guys are aware. I'm going to begin first this morning with charts. I'm going from top down, slowest time frame, all the way down to fastest time frame, and I'm going to hopefully be able to predict those high percentage trades starting at 8 a.m. this morning. Once I'm done this morning, I'll toss it over to Marty Errico. He's from Traders Audio. He's all the way across the country in New York City. He's got his feet on the ground in the NYMEX exchange, and he's going to be talking to us about what he's seeing in the pit this morning, courtesy of Traders Audio. All righty, let's get started. First things first, I'm going to jump right into my charts this morning. We're going to start with a weekly chart because it's, of course, the first of the week. Now, this is going to should be a little bit of a quiet beginning of the week here. We got non-farm payrolls behind us last week. And, of course, we have no major news this morning on the calendar. So if you look over at the calendar this morning, you'll notice there isn't any major news on the schedule. So we know that this morning is likely to be a little bit of a sluggish start. It's a Monday, and one of those Mondays, it's a summertime Monday, so people are probably still unpacking the campsite from the weekend, right? Unpacking the boat, cleaning up the home office, getting ready for another busy week here. But without any major news, we got to be patient this morning. What do we see here on the weekly chart? Weekly chart tells us we're trading at the top of the price wedge. We know we're sitting at resistance. This weekly chart this morning, and of course, this weekly chart shouldn't really surprise us. We've been watching this for quite some time here. We know that as we get closer and closer to the end of this wedge, that something is going to happen. We're just waiting for that something to happen soon. We don't quite know what it's going to be, but we do know that with this price wedge, we do know that we are looking bearish at the top. With this sell zone at 95.83, we are looking bearish at the top. Difficult to predict as far as what a weekly chart will do for intraday trades today. But if this weekly chart has anything to do with what happens this morning, price should be falling. We are sitting at resistance at the top of a wedge on the weekly chart. Moving on down now, we should see the same thing in the daily. Daily chart shows us the same exact thing. One of the key components of the daily chart is that you'll notice we did break slightly and closed slightly above the high of that about 96-ish area on Friday. That means that the window is wide open for price to keep moving higher. So even though we do have that resistance in the weekly chart, the daily chart does show us, yeah, there is a glimmer of hope here with that close on the daily candle above the sell zone. We know that price now may have the strength to test that 96.99. Looking at it from this point of view, doesn't look like it's going to happen though. Daily chart, I would say, still tells us we are bearish. And then moving forward now, one of my favorite time frames here this morning. This is definitely something that you want to be looking at here. This 4-hour chart. Now, I don't remember if you guys, I'm not sure if you guys were watching last week, but if you remember last week, we talked about this bear channel. And remember how this bear channel we talked about, we have this this Fibonacci formula that will anticipate a breakout of a channel and then a failure. Well, if you rewind the tape to last week, and even more so, we've done this the last 3 weeks in a row. We've seen a channel break, and then we've anticipated a reversal zone. Now you can see this one got really close. I'll be honest, right? We're still 10 ticks away from testing the lows of that reverse zone, so we may still make one more move up. But the way this looks right now, it looks like we have done exactly what our advanced price structures. That's what we call them, guys. We call these the advanced price structures. A price structure is a wedge. A price structure is a channel. A price structure is a sideways range, right? Well, when you add Fibonacci to those price structures, now they start, right? Now they get more powerful, and now they become what we call the advanced price structures. These price structures are extremely powerful tools that we use every day in our trade room, and you can see here right now we have an example of that happening right now on this bearish channel. We already know a bear channel tells us to sell the highs. We already know a bear channel tells us to sell the fake out breakout. We already know this bear channel tells us look for the price reversal starting at 96.49, and now we will expect price to come tumbling back lower. We can see we have a buy zone here starting this morning, 94.23. So 94.23, that's going to be your, we'll say 25, just to err on the side of caution. Keep an eye on that number, 94.25, because that's exactly where we could easily see us ending up this morning by the end of the morning session. 94.25 is going to be a good target for all you sellers out there. I'm not done yet, though. Let's head over to a 60-minute chart. The 60-minute chart throws even more fuel on this fire. I love the 60-minute chart because we see the exact opposite thing as the 4-hour, but it couldn't be any similar, right? As you can see, the bullish channel here shows us that we are falling off the highs and, of course, headed down to the lows. Doesn't matter to me. I had a bear channel on the 4-hour, and we had found a reversal zone. Now we have a bull channel, and we're still seeing the exact same thing. So we know that we have the likelihood for falling prices this morning is tremendous. Now, let's make sure we have the pieces put together to be able to trade this. I'm looking at around 95 even, right? We're looking at 95 even or so at this low of the channel. So that's going to be the short-term target that we're going to use. We can revise that short-term target below 94.50 area. This indicator is almost done, this zones indicator. We've been working on that for the past 3 weeks. This will be done later on this week. We've got 95 even. I've got 94.50 down here. You can see those are going to be excellent targets for us on the short side this morning. So for all you position traders, for all you longer-term traders, find that retracement pattern, get into that trade short. Look for the major levels at 95 and 94.50 to hold us up. These will be my seller's targets here as we go lower. But I've got one more chart I want to look at here before we toss it back over to Marty. Let's take a look now. I want to go over down to my fastest time frame. I want to look at what I call my 5-minute VIP. Here's my 5-minute VIP chart. My 5-minute VIP chart is going to add the most important levels, the very important price levels. Now, I'm going to post this chart on our blog this morning so everybody can see it and everybody can use it later on today. But let's take a look now, first of all, what we're dealing with. The first thing we see is the London trading session is relatively narrow. When the London trading session is narrow, we know that one of two things is likely to happen. Either A, the market is likely to be narrow and continue to be narrow and two-sided, or B, we know the market is still going to move higher or lower and is going to likely have a breakout. So the first thing we'll look for when we see a narrow trading range is two-sided trading. Let's talk about what if price goes lower this morning. We know that price will move higher, lower, or sideways. If we start out looking at price moving lower this morning, we have levels below us now. Of course, we'll look to bounce off the reversal zone. We will be looking to buy the reversal zone. If I buy the reversal zone, my targets will be the trend line overhead, and my targets will be back up to 96. So if we buy the lows, my targets are back at the highs. If we happen to go through these lows, I'm looking at another reversal level at 95.28. I will be looking for a reversal at 95.28. Again, same thing. I will use the trend line, assuming it wasn't broken prior. I will use the trend line as a target, and I will use the highs of the range as a target. If we keep going lower, I've got 95.10, 95.05. Wait just a second. Didn't we see 95 even? Wasn't this the lows of the channel? Absolutely it was. So now we know we've got at 95.10. Now we know we have 95.10. Again, I'm looking to buy a reversal, 95 even, 95.10. And again, I will use levels all the way above me as a profit target. Now, I've also located a huge reversal zone. This is the daily reversal zone. This takes yesterday's highs, yesterday's lows, which of course would be Friday, and it projects them. Now we have a daily reversal zone. And as you can see, this daily reversal zone is quite large. I will look for reversals at the top and the bottom of that zone. So I'm looking for reversals around 94.75. I'm looking for reversals at 94.82. And I'm looking, of course, for a reversal here at 95.05. So be on the lookout here as price falls. Once again, if you missed it earlier, I've got levels at 95.43, 95.28, 95.10, 94.05, we'll call that 95 even-ish, right? I got 94.82 and 94.75. As price drops, if it happens to go lower, we talked about 94.25, right? 94.25 is all the way down here in the middle of nowhere. And so we're not quite sure what we're going to be seeing at that time. If we get as far as 94.25 this morning, I will have already had to readjust for market personality. Just keep in mind, though, we have Friday's lows all the way down at 93.72. I'll tell you, if this market catches fire, it could push all the way to that 94.25. I will, as always, be looking for that price reversal. If it keeps on plugging, I'll be selling retracements because we'll know they're hunting for that previous low of day down there at 93.70, 93.72. So we know we've got a big wide open space there down below us. Those are the levels now to the downside. Let's move to the upside. Now remember, price can move sideways as well. So if price happens to move sideways in the middle of any range, I will sit on my hands. We talked about what our plan was if price falls. My plan if we move sideways is to sit on my hands inside of this range. I will wait patiently if we move sideways. Now, looking at this from a Fibonacci standpoint, we have resistance levels overhead that we will be using if price rises. If price rises this morning, we will be seeing buying opportunities. I will be buying pullbacks on the way up. I'll use the 95.85 area as my first target. Again, we teach all of these specifics to our members in our trade room, right? So come out and join me in the trade room. We'll teach you all the specifics. The key is I'll teach you how to find all these levels. That way you're not relying on me all day long. 96.02 is going to be a level of resistance. That will be a target. So we'll take targets off at the short-term Fibonacci and, of course, the 96.02. As price rises, I will be looking for a reversal here in the reversal zone. And again, as always, we'll look to take profit all the way at the other end. If price blows right through it, we will look to buy a pullback. That pullback, though, will have to be short-lived. 96.30 will have to be my reversal zone number 2. I'm looking once again. We saw a reversal zone number 1. I'll look to sell it. Reversal level number 2, I will look to sell it. And of course, reversal number 3, we have the previous high of day. That's Friday's high of day at 96.39. That will be on my radar. So we have levels above us here, 96.15. Well, 96.02, 96.15. We have 96.30, 96.39, 96.48, and of course, all the way up at 96.76. At any time in this process, I will take the reversal off those levels. At any time in this process, I will look to sell short. Previous high of day is an excellent target for reversal. 96.48 and 96, if we get all the way up, 96.76. Now, boy, last week, guys, we saw 3 times last week that we hit that reversal number 4, and it gave us a ton of profit last week, if you guys recall. So I had a great week last week using these reversal zones. Now, don't forget, everybody, Monday morning, summertime Monday, we've got no major news in the calendar this morning. I'm seeing bearish in the long term, but bullish in the short term. As you can see here, we're sitting in the reversal zone right now. I will look for a reversal. Once we get above that 95.56, I will be looking to be a buyer. We do have those bearish clues, though, from the big boys. So it may be too difficult to buy here, and we may get this thing to push right on through. If we see this price action is strong to the downside, I will be selling short. I will discount this 95.28, and I will be looking for a 95 even test. Write that down, 95 even. I will be looking for that to be the big jump back up. We're probably going to try to make a move lower, which I expect to be a little bit more challenging. The easier one's going to be once we see those sellers are exhausted, the buyers step back in. Don't predict. Wait for it to reverse, and then jump into those pullbacks on the way back up. All right, guys? I'll make sure this chart's posted for you guys in the blog this morning. And that's all I got on my end. Let's take it all the way across the country now over to see my friend Marty. He's looking at the NYMEX trading board this morning, and hopefully he's going to see some things that match up with mine, or maybe I'm completely off my rocker this morning. How you doing over there, Marty? What are you seeing, my man?
Good morning, JJ. Good morning to you, ladies and gentlemen, on a Monday here for you guys. Rest, relax, refresh, ready to go for another run. All right, guys. So, boy, you know, I have to agree with JJ just in the sense of I am looking just for a little bit of a sideways chop trade today. Again, I am looking for overall, this is just going to be my call for direction here. I'm looking for a bit of a pullback, right? As you can see, look at the wedge channel that we're in. It's bullish channel. You see, look, we bounced right off the high of the channel. Last night we were looking at this and we said to ourselves, you know, that bullish channel there that JJ just had up was telling us that we could be selling the high of this channel and then look to rebuy the low of it and come back up in. So right now we're in the middle of the channel, so no trade at the moment, but I'm thinking we can get down to the bottom of it around that 95 even. Right, that 94.10 was the line in the sand last time coming on the way up. 94.60 was also a very big line in the sand as well, right? 94.60, which is the low of the channel. 94.60, low of the channel. So that's going to be a really big line in the sand that a lot of floor traders are going to be looking at. And if we can get below that, then it's, you know, elevator down and we'll get down to the low of the range. But if we can hold that 94.10 and 94.5, it is going to be hopeful for the bulls. This morning I'm looking at some breaking news that came across the wire, just some rough weather over in Iraq that's stopping some oil exports for today and some oil outage and output according to some shipping sources. Also, it looks like that the FCC is going to be shutting down some Texas refineries and some other refineries around the Texas area, Fort Worth and Dallas, Texas area. So that's something that we want to keep our eyes on. Now, in the Committed Trader report, the COT report, we did see an increase in net long positions from dealers and hedge funds and micro funds. Now, the micro funds have been coming up on the trading floor, and they've been basically working in a net long position from Friday. So honestly, to be honest with you guys, a lot of the paper is long. The locals continue to sell the volatility. They continue to sell the calls and buy the puts, which is a bullish play. I mean, sell the puts and buy the calls, which is a very bullish play. And locals have been working that position in for a while. The largest trade in the pit on Friday was a 95, 100, 102 butterfly structure, and it was also a 95.5 to 100 fence in July. So it was a July 95.5 to 100 fence that came into play, where still the locals, they sell the put and they buy the call. So that's been a very popular trade the last couple weeks, and it became even more popular as they put a lot of money in that $100 level, right? So we've seen over 17,000 July 100 calls trade in the pit. We saw about 5,000 on Friday, 95.5 calls trade in the pit as well. So they're putting some money in the upside, and they're shoring up the upside, believe it or not, a lot of these guys on the trading floor. And do I agree with them? Well, the channel that I was pointing out before kind of shows my opinion. All right, Brent Crude, guys, trading above 104 right now. We're about 104, up 103.95 now. We just ticked below 104. But the thing is, Brent was trading a little bit lower this morning when I first looked at the chart. So, you know, Brent's starting to climb back up. So exactly what we're talking about. A little bit of a pullback, and then we can see a long come in, and we can see some buying come in. So, guys, I'm looking at your regular crude here, 95 halves trading right now. Implied volatility is about 22%. Open interest, ladies and gentlemen, it currently stands at 225,268, which is right now just indicating somewhat of a mid-range trade at the moment. Our Bob Gasoline is currently just trading up at 286 even, right? 286 even. 287 even was that top end number, just like that 96.50, or really 96.39 was the top end number for crude. So you can see RBOB fades out just a bit, a little bit of a pullback in the RBOB. Implied volatility 29%. Open interest 93,181, showing some shorts got squeezed out of that market on the open interest for RBOB. Heating oil, ladies and gentlemen, trading at the 288 half level right now. Again, heating oil did top out at 291 on Friday, so you can see we're getting a little bit of a pullback here in all three markets. So the multiple market divergence working like a charm. We're pulling back just a bit on all three markets across the board. We're looking at volatility coming in on all three markets across the board. Open interest also squeezing out all shorts across the board. So again, we're lining up here with the RBOB and heating oil, and the Brent, so it's something we really want to keep our eyes on. This morning here, indication on the Brent WTI spread this morning. We're looking at it and we're saying, whoa, 850, isn't that bullish? So 850 on the spread this morning. We have We are in contango at the moment, and we have tightened up on the spread for Brent WTI. Right now, again, it's sitting unchanged on the day, but still it's 8.50. We were 9.10, 9.20, $9 on Friday, so you can see the tightening up in the spread that we've seen. And if we see this spread backwardate back up to 8.75, $9, that will be bearish. If we tighten up and we stay around this 8.50, $8 level, that would be very bullish. So again, widens out, bearish, tightens up, bullish. Calendar spreads this morning are setting us at a mid-range trade at the moment. Again, the calendar spread indication for the supply-demand differential is telling us right now that we can expect a little bit of sideways chop, especially as I look at the July to Augie contract. It shows me just about 31 cents, and it's unchanged on the day. The July to SEP is 24 cents, and an inverse of 24 cents, and it's unchanged on the day. And then I even go down to your July to October, and that is actually inverse by 5 ticks, right? And it's unchanged on the day as well. So we're looking at very sideways trade here in the calendar spread. So again, play the range. We're looking to sell and then come up and buy back up to the high end of the channel. So again, we're playing the channel. The charts will be up so you guys can see them in the trade room, so you don't have to worry. Alrighty, guys, so now just really quickly take a look here also at our levels here. As we kind of just went through just a detailed look at our supply-demand differential. We looked at our open interest. We looked at our volatility, our multiple market divergence. One thing left to look at the dollar here, and then we're going to look at levels. I'm sorry, dollar first, guys, then we'll look at levels. So the dollar this morning, with no news here on a Monday morning, summertime Monday morning, as JJ was mentioning, we see the dollar up about 40 points, or 40 ticks, 20 points, at 81.87 even. DXC also trades up about 80 points as well, about 60 points as well, the DXC. So we're watching here our index is just trading a bit higher here on the dollar. All of our currencies trade in negative territory. As this dollar trades higher, what's crude's trading lower? There you go. So the guys, that's that inverted correlation, risk-on sentiment in the market. So we can rely on the dollar here today, as we do have a risk-on sentiment. Now let's look at levels here. Pit session high from Friday's trade, 96.39. Your low, 93.72 in the pit session. We end up closing and settling the pit session at 96.05, up on the highs, quite near high prints, above 96 even. Today, ladies and gentlemen, your daily pivot for the crude in the pit session off the board here at the NYMEX is going to be 95.39. Once again, it's going to be 95.39. So that's your daily pivot today, which we are actually just trading above at the moment. Again, just a touch above that 95.39. We're just a couple ticks away from that, just about 10 ticks away from that. As I mentioned, open interest 225,268. Along with here now the rest of your levels you saw on Friday, we had a net change of about $1.75 to the upside. And boy, oh boy, we had a $2.67 range. Volatility, ladies and gentlemen, is currently just at about 22% or so. The OVX traded down to 22.41. We'll get to large strikes in a minute, but let's just talk about some resistance above in those blue letters on the left and the support below in the red levels on the left as well. So resistance above, 97.06, 98.06, and 100 even, and 173. Support down below, 94.39, 92.72, and 90 even 05. So some large strikes that we spoke about earlier. We talked about the 95 half fence. We talked about the 95 half strike, 100 and 102 strikes. And then we also talked about that downside activity at 94.50 level. Very, very, very important line in the sand. Just as that 94.10 level was very important last week, and when we broke above that, we kind of skyrocketed higher. If we can hold levels above 94.60, the level was on that chart, but we're going to call it 94.50 in the options because they don't have a 94.60 strike. 94.50, very important level. If we get below it, we can see some selling. Once we really get below 94, even to confirm it, selling indeed, back down to the bottom of the range. If not, I think we can hold this thing, hold the 94 half, and then trade a little bit higher. But again, range-bound trade expected today. Expect a little bit of a pullback, then possibly back up to the high of the range and trade sideways. So trade within range. I don't think there's going to be any crazy breakout to $100 unless there's some crazy geopolitical news today or any type of breakout above the highs from yesterday. Again, we have to see some type of geopolitical news or something to drive the market. As of there is nothing to drive the market today. All right, so those are your levels here. Let's just quickly talk about natural gas. Natural gas, we continue to trade in just a bit of a range here, guys. Talking very sideways type activity here in the natural gas. As you can see, I do have a, well, I don't have a bear channel up, but there is a bear channel. Trust me, believe me, you'll see it when you come on the call. The bear channel right now is basically gives us an indication of 3 280 the low, 390 the high. So we're working our way back up to those 385, 386 evens just printed. So 386 even just printed. Again, if we get above 390, we can be buying up to 395. If not, we'll be trading within the range of 380 to 385, 380 to 390. Again, it's a really simple game plan of attack. We're just trading in the range. Again, keep in mind the lows were 380, 170. 380, 170 was our low that we want to keep an eye on after those inventory numbers and the Baker Hughes rig counts. So watch that 380, 170. And if we get below that, we could sell down to the 375, 380, and then look to buy at 375, 380. So levels, ladies and gentlemen, 385.20, your high on Friday, your low on Friday, 382.40, close and settle, 382.80, right near the low prints. Daily pivot today, 383.5. Once again, that's 383.5 is your daily pivot. Resistance above, 384.60, 386.30, and 389.10. Support down below, 381.80, 380.70, and 377.90. Again, those are all your lows that you want to be buying, and up on top, those are all the highs that you want to be selling. Very simple game plan of attack. And that's it for me, guys. Again, I'll see you all in just about less than an hour here for the pit session opening bell, the pre-pit session commentary. I'm going to hand you guys back over to JJ over in Los Angeles. And JJ, I'll email you out all that stuff. We'll talk later, buddy. Have a wonderful day, ladies and gentlemen. See you all later.
As always, Marty, thank you so much, my man. Good job this morning. Happy Monday to you as well. As Marty said this morning, we've got some two-sided trading expectations coming in with no major news this morning. I'm going to have my numbers up on the blog here momentarily. Don't forget, guys, at any time in the morning, you guys can use all of our levels. They're posted right at sidewaysmarkets.com, and you can go right over and take a look at the page right at the top of the blog here. You'll see crude oil, squawk, and prep. Head over to the Sideways Markets, grab that link, crude oil, squawk, and prep, and you'll always see the video recap and all the charts we have each day posted there shortly after I finish this call today. Thank you so much, guys and gals, for being here today. Once again, my name is Joseph. We always really appreciate you guys logging in each morning. I'm JJ at School of Trade. From Marty at Traders Audio, thank you all for watching today. We'll see you in 23 hours and 30 minutes for a Tuesday edition of our morning prep. Adios, amigos. Bye-bye for now.